All right, man. Welcome. Welcome to the start of the year 2025, right? And if you don't know me by now, my name is Casino Trades, and I've been trading for the start of 3 years, right? I just did a full 2 years, right? So this is the start of my third year, right? And I'm still unprofitable, right? I was trading a lot of support and resistance, supply and demand, and now about 6 months ago, I learned ICT concepts, right? And I'm really starting to make some money, right? Still unprofitable, still end of the year unprofitable, right? But I've been able to manage my loss, manage my risk, understanding my strategies, understanding what I'm supposed to be looking at, understanding what I'm not supposed to be looking at, all of the do's and don'ts, right? So we're going to start off this year being super transparent, showing everything, right? I trade prop firms and I trade live funds. I trade on Tradeovate, right? And on my prop firm, I trade on Top Step. But this year, I'm going to be more trading live funds than I am on a prop firm because I just want to see the difference. And on my prop firm, I would have not been able to cash out yet, but I passed. I think it was 8, 9 accounts. I think I just passed. Recently passed two, and then I lost both of those because of you already know why. We'll get into all those things later on. But then I just passed another one. So yeah, I'm on my ninth past account, 50K challenge. So I think overall, I probably failed maybe like, I probably, overall, I think I probably purchased, I wouldn't say it's 50. I would say maybe like around 30-ish. So I passed like 9 different times and I probably failed like a good 20, 25, 30. So like, I probably failed probably like 30 times. You know what I'm saying? So I passed like probably like 9 times. No more than 10 times. I know for a fact that I passed and got funded. I just have not cashed out yet. And I have an on majority, not gonna say majority, but out of the 9 accounts that I passed, I four of them, out of four of them, I had four positive 200 win days. So I basically was about to cash out on four of them. So I did pretty good. But anyway, so like I said, so yeah, so I trade the Nasdaq, I trade futures, right? I trade the Nasdaq and ES, right? I trade ICT concepts, which is basically liquidity, trading to liquidity and efficiencies, understanding that price does four things at all times, right? Which is the price is always doing four things at all times, which is it's generating liquidity, which is it's generating the high. So like it's generating this high, it's generating the high, it's generating these highs, right? It's generating these highs, right? So that's the one thing out of the four that the market always going to consistently do. It's going to generate highs and it's going to generate lows, right? It's going to generate highs and lows, right? It's generating these lows. As it's doing that, it's getting, you know what I'm saying? So anyway, let's go right back to it. So it's doing this the first thing it's doing is generating the highs and lows, which is it's generating the liquidity. It's creating the liquidity, right? It's creating the liquidity. The second thing it's doing, it's taking the liquidity, right? So like I said, right, it generated this liquidity right here and then it swept it, right? It generated this low right here and then it swept it. So it's generating the highs and lows and then it's taking the highs and lows at all times, right? That's the two things. The third thing that the market always do is it rebalance. So for example, price was here, right? It generated this high and it generated this low, right? It did not take this high, right? But it took this low, right? So it generated this high, generated this low, took the low, so it swept the liquidity, right? And then it rebalanced. So it was down here, and then it came back into the range. So it's rebalancing back up to the range, right? So that's it's rebalancing to equilibrium. Equilibrium, right, is basically the range, 50% of the range that it came from, right? So basically, if it was up here and then it was up here, right, and it comes back to this zone right here, it rebalanced. It came back to 50% of the range, right? And you use that, you can use your measuring stick, and you can draw from here to here, and you can get the 50%, right, is equilibrium, right? And then what it do? It's gonna rebalance to an inefficiency. An inefficiency is a gap, right? So, like I said, let's zoom in. Hold on, let me move this. So let's zoom in right quick. So you can see what I'm talking about. So, like I said, it generated this high, it generated this low, right? And then it generated this low, right? So now it generated the high, generated the low. It swept. So you see right here, it swept this low. It swept the low, right? So generated liquidity, sweeps the liquidity, then it rebalanced. It'll rebalance to equilibrium, right? Which is it was price was here, and then it dropped to here, right? It was here, then it came down to here. These are the two highs and the low that it created. Then see what happened. It once it broke down. Let me do this one. So no, that's not a good example. Let me see. Oh, it's right here in my face. Tripping. All right, so right here. So let's just. Oh, I keep clicking the wrong one. All right, so it generated this high, generated this low, right? It generated high, generated low. It came back. So when I means it retraced back to equilibrium, this line right here is 50% is equilibrium. So it was down here. You see how it came back to equilibrium. That's the third thing it do. The fourth thing it do is it comes back to an inefficiency. An inefficiency is a gap, right? So, which is a fair value gap. So let's draw a fair value gap right here. I hate when it extends like that. All right. So, all right. So remember, it's from gradual measurements to it was up here. It came all the way back, came all the way down here, right? It rebalanced to an inefficiency. This gap right here is an inefficiency. This bearish fair value gap, we all know a fair value gap is a three candlestick pattern to where the first wick and the third wick do not touch, and it leaves a gap between price. Right? I actually drew it wrong. It's like this. So this is a fair value gap right here. See it? So where this is a three candlestick pattern, one, two, three, right? To where the first candlestick low wick do not intersect with the low of the third wick. It do not touch, right? You see how it's a gap between this and this, right? You see how it's a gap, and that's the fair value gap, which is a inefficiency because it's inefficient to buy side, right? It's a sell side imbalance, buy side inefficiency, right? And look what happened. It dropped down and then it rebalanced to an inefficiency, came right back, right? So that's a fourth thing that the market does at all time, right? Which is generate the liquidity, hunts the liquidity, which it takes it, rebalance with inefficiency, and it rebalance to equilibrium, right? Those are the four reasons that market move. And if anybody tell you otherwise, they just don't. They just don't know, and it's not even their fault. So I'm trying to think about anything else I want to talk about. I want to talk about because this is basically like an introduction video of 2025. Letting you know what you guys are going to be expecting from me. And I trade live usually every day from 9:30 to 12, right? In my free Discord. If you want to get access to my Discord, I will put a description at the bottom, or just type in Discord at the bottom, and I will send you a invitation to my free Discord to where I can teach you, I can help you out, right? And like I said, I do not know everything, right? I am a growing trader, but one thing I know is that you're not going to outstudy me, right? So if it's something that you think that I'm doing that's wrong, help me out because that's what we're here to do. We're to help each other out, and we can find out who's wrong, right? Because it's all about knowing the right information and then learning it and then applying it. So if you tell me that I'm wrong, I'm gonna go do my due diligence, right? See if I'm wrong, and if I'm wrong, we can come together and I can say, "Oh, my bad, you was right, I am wrong," and then I'm gonna fix what I'm doing because in trading, you have to be able to fix your mistakes. You have to be able to do the hard things, right? Most traders do not do hard things. They focus on doing easy things, right? And in trading, we all know you have to do less. You have to do less trading. And wait, I'm sorry. You have to. It's less is more. Sorry. In trading, less is more, not more is more, right? Less is more, right? So that's why you gotta have a plan. I have my rules. So I basically my strategy is basically ICT. So if you don't know what that is breaker blocks, order blocks, fair value gaps, inverse fair value gaps. Training a lot of that, breaking retest, some of that liquidity, right? I'm waiting for a sweep of liquidity, so I sweep it before I get into my trade, targeting other side, depending if I'm still bearish or bullish. But my rules is basically no more than 3 trades a day for no tops 4, right? If I'm trading live money, I can't lose over like 150 a day, right? And on the prop firm, I got some rules also, but I'm real more lenient with the prop firm because that's where I'm just trying to. I use the prop firm actually just to like master my trading. They get better for my trading. They get better with my psychology, right? To not get scared to execute. That's what I do with prop firm. That's why I can pass up and then lose them because I'm not scared to execute. I just gotta actually get better with not over. I gotta get better with being up and then just staying up, right? I have a bad case of over trading, especially when I'm winning a lot. Because once I start winning a lot, I ain't gonna say I overtrade, but I just feel like why not just keep trading, right? But of course, we know that's not the method. But anyways, let's just go back. I just want to go over. This is the 15-minute chart right here. I just want to go over this week. So we see we have been pretty bearish. I'm tripping. Right? So as you see, we have been pretty bearish, right? But we've been bullish the whole year. Like we just been like running up like all year. But we're at all-time highs. We are all-time highs. So you already know all-time highs is literally always a magnet. But what you see this big displacement down, right? So this is what I do also. I go to the 5-minute. I go to the daily chart, right? This is what I do. This is how I look for my trends to see if I'm bullish or bearish on the day. But I'm a scalper, so I don't really worry about the daily profile that much. But I want to catch the direction. So I get up here. So I start down here. So we're bullish, right? Remember, if we're making higher highs and higher lows, we're bullish. If we're making lower highs and lower lows, we're bearish. Clean it, as simple as that. It's not complicated what's going on. So we swept the highs, right? Did we sweep these lows? No, we didn't. We stopped right here. Took the highs again, bullish. Came back down. Did we sweep this low? No, we didn't. Came up. Did we sweep this high? No, we didn't. So hold on now. The bullish standpoint might have to be on a pause for a second. Now, do we take this low? We didn't take it low. But one thing we know, we did. This is a bearish order block on a daily time frame because we so hold on. So one thing we know this. So this is a basically changing the state. This is the order block right here, changing the state. See, with a couple with a fair value gap. See, but this fair value gap is deep in the premium, right? This fair value gap is like literally. So if I drop to the high to the low, so you see this fair value gap is above 50%, right? So I don't even want to see it come way up here, right? So if it start rejecting here and start coming back lower, and it then sweeps this low right here, we might be bearish on a higher what call. And then let me show you something. I don't know if you know about stocks and stuff like that. It's something that's called the fear and greed index. All right, let me show you. All right, look. It's called the fear and greed index. This basically determines like the market, like basically how people feel at the moment. Like if people are fearful, which is they're scared, which means they're taking their money out, or they're got greed or extreme greed, which is that they're getting greedy. They trying to they putting their money in because they think it's gonna print right now. Look where it's at. It's at 28%. They're almost at extreme fear. And one thing we know, when we at extreme fear, is panic time. It's panic time, right? So to be mindful of that, and then remember, let's. Why am I thinking keep going there? All right. So then this is a daily chart. So if we sweep this low right here, you know what I'm saying? But we still got, we still could be bullish because we're still creating higher highs. We just didn't make a higher high, but we didn't make a lower low. So right now we vibing. So this week, we still got what Wednesday, what's today, Tuesday, Wednesday. We still got like 2, 3 more trading days for the week. So the market may be reaching this low right here though. It may be coming. Remember, if trading ICT, right? If I wanted it to go higher, I wanted to sweep this low, right? Which is manipulation. I want to fake people out, acting like we're gonna go lower, sweep this low, and then come up. But look at this, sweep this low into a bullish fair value gap. You know what I'm saying? So it could be something like that, right? We could sweep this low. So sweep of a low into a area where I'm expecting it to bounce from. Boom. And one thing we know on the weekly, we're still in a weekly. Look, this is a weekly order block. So we got order block proportion. So this is a proportion block. Because we got the order block right here, 2 down close candles, aggressive close above on the weekly time frame, sweeping this high right here, and a close above, right? Weekly order block. It came back down. Remember, until it breaks. As long as they keep respecting it, is so price came right down. Look what happened. It tapped right at the 50% range, and then it just displaced higher, sweeping this high, creating a new all-time high. Right? So, see what I'm saying? It could come down, right, into the area where we're expecting it. And you know what's crazy? ICT concepts works on swing trades also because it's just trading the chart. You just trade on a higher time frame, right? So remember, so we have so many things that's coupled together to give us the reason to go to break above. But as long as we could sweep this low. But if we stay in this zone right here, you know what I'm saying? But don't be mindful because we did just actually because we're actually in a daily inverse fair value gap right here too. So I'm saying so it can use this zone as a and this is an order block. So you see you got a lot of things coupled together. So that's why your bias is important. Your bias is important because you want to know the direction to base your trades off. Because this is a daily time frame, right? I trade on a smaller time frame. But anyways, though, so that's my analysis right quick. I just wanted to come on here and chop it up a little bit with y'all, man, and to let y'all know, man. Let's get it's the beginning. You know what I'm saying? I'm not super new to YouTube, but it's okay to be bad at something, right? But it's not okay to stay bad at it. You know what I'm saying? So I appreciate y'all tuning in. If you got any questions, you got any comments, put them in below, and let's get it, man.